Good afternoon, everybody. Thank you very much for coming today. I'd like to just briefly welcome our distinguished guests at the top table today. Although they probably need no introduction to most of you, we have, to my far right, we have Kathy Matsui, the general partner at MPower Partners. We know her, of course, most notably perhaps for her research into womenomics while she was at Goldman Sachs in Tokyo. After leaving there, after stepping down, she launched MPower, which is highly unusual in being a mostly women-led venture capital fund in Tokyo. Her colleagues are Miwa Seki, to my right, a former financial industry executive known for her best-selling translations of business books. And we also have, of course, Yumiko Murakami, former head of the OECD's Japan office and current advisor to the Cabinet Office. Last but not least, on the far right, we have the lone male partner at the fund, Masatoshi Fukasawa. And I hope we'll be able to hear about his insights into the unusual situation of working for a mainly female firm in Japan. So without further ado, the topic is Beyond Womenomics, can a female-led investment firm change Japan with ESG? And I'd like to hand over to Kathy to introduce, I think she has some slides on MPower and its activities.
Thank you, Isabel, and thank you, everybody, for taking the time out to join us today. I know there are people also online attending, and really appreciate you participating and attending this session. So, as Isabel described, actually the three of us here, women, we launched together MPower Partners Fund at the end of May of this year. And if you see here, this is our mission. It's fairly straightforward. We're trying to empower bold, globally minded entrepreneurs, providing tech-enabled solutions to societal challenges. We are integrating ESG into our investment process, largely because we truly believe that ESG principles are a key driver of a startup's growth evolution. And we can talk a little bit more about this later, but I know ESG has become quite kind of a buzzword, particularly in financial markets. It seems like if you just stick the label of ESG on any financial product, it sells very well. But at the same time, there's also the risk of what they call greenwash. And we obviously want to avoid that with our startups. We want to ensure that this is part of their core business strategy. And this is where we come in to help them integrate that. I think beyond those 2 points, though, our team collectively believes that Japan's venture ecosystem could be a lot larger and more vibrant than it actually is. And to be fair, there has been, if you look at the total amount of venture capital invested in Japan, it has grown tremendously in the last 7 years, in fact, by 7-fold or so in the last 7 years. However, if you look at the absolute size of the venture investing market here, it depends on the year you choose, but it's only roughly 1/50th or 1/60th that of the United States, despite having very high quality talent, despite having quite abundant capital, and despite having some of the world's leading technologies. So the other sort of long-term mission we have is we believe through ESG integration, we can help make Japan's startup market ecosystem more vibrant, more on par with at least the size of its economy representation in the world. I'm going to let my team members introduce themselves. As Isabel described, I retired from Goldman Sachs at the end of last year. I mainly covered, of course, publicly traded companies, but I did a lot of work over my 30-year career in issues related to ESG, such as corporate governance matters, such as womenomics, gender diversity. So we think we do have some expertise on our team to help companies understand what ESG is all about. So, Yumiko, do you want to?
Sure, thank you. As Isabel mentioned earlier, I was running the Tokyo office of OECD literally until the day before we launched the fund at the end of May. So in that capacity, obviously OECD is an international organization, and they do quite a bit of policy recommendation work. And I have been very much involved in many ESG-related policy discussions, such as diversity, environmental discussions. So what we do now here with my partners at MPower Partners actually is very relevant to what I was doing as an OECD as well, from a policy making perspective. The panel that I'm on for Prime Minister Kishida, you probably know, it's called New Form of Capitalism. And there is quite a bit of discussion around ESG in that discussion as well. It's still very unclear exactly what will come out of that discussion, to be honest with you. It will be another couple months or so. But all I can say is, yes, there is a very strong focus on the ESG discussion, policy discussion, not only from the government, but also the private sector. And I do think this is a really interesting time for us to launch this fund, because I do believe that we're not going to be the last one. I can tell you there will be many, many more funds. In fact, there are many funds already claiming that they are integrating ESG into their investment processes. And that, I think, is a great thing, but also comes with a lot of challenges and question marks, because there are still a lot of question marks in terms of what kind of frameworks should be used. So maybe something that we can discuss today in terms of, what are the challenges, what are the issues that need to be addressed when we talk about ESG investment. It's such a big buzzword, but in reality, it's not so easy to actually put this in action. So thank you.
Sure. Nice to meet you. My name is Miwa Seki. Although probably more people in Japan know me as a translator of Factfulness, a million-seller book here. And I've translated more than 50 business publications in the last 10 years, including Peter Thiel's 021, more recently John Carreyrou's Bad Blood, about Theranos' story, and many other books. I've developed my career in finance previously. I started my career actually in Dentsu, an advertising agency, which didn't last long, less than 1 year, and moved to Clay Finley, which was in Yurakucho Denkibiru before. And then went to business school, met with Yumiko, that's where we met, and moved to a company called Clay Finley, which was managing global equities for U.S. pension fund, and I was a Japanese portfolio manager, managing a concentrated growth public equities here in Japan, where I invested in Uniqlo and Nitori, and SoftBank and other stocks. That's where I met Kathy, and we share the same maiden name. My maiden name's Matsui, Murakami, and Matsui, that's where MPower's M came from. And we also share the birth month and the birth year. So we...
all 25.
Yes. We've been celebrating birthdays together, and about a couple of years ago, we were discussing about what next, and we thought there would be an opportunity for women-led venture capital, where the industry, which is even more male-dominated and homogeneous than the traditional investment banks. So nice to meet you.
Masa?
Hi. Nice to meet you. I'm Masatoshi Fukasawa. And I joined MPower just 2 months ago from October. So I'm very new joiner. But I'm very excited joining this, MPower, very powerful and prominent, 3GPs here. And I'm so excited and learning every day. And my role in MPower is covering the sourcing, due diligence, and investment, and after the support for the portfolio companies. So basically, I'm in charge of the overall investment process and collaborating with the 3GPs here and our members. And before joining MPower, I worked for 8ROSE, which is the Fidelity's-backed venture capital. This is a global venture capital. And 8ROSE have a Japan fund. I worked there for 5 years. And basically, I have done the middle stage or later stage venture investment, and also supporting and collaborating with startups in Japan, and also collaborating with the 8ROSE global members to deal with the global startup investment. So that is my experience before joining MPower. And before 8ROSE, I worked for DNA, which is a Japanese internet company. And I was involved in the many new business launch in DNA. For example, the DNA has launched a healthcare business, which is a genetic testing business. And I was the head of that new business. And also, I was in charge of the corporate venture capital of DNA. So I was involved in a lot of internet or mobile business in DNA. And also, I worked for Accenture. Before joining DNA, I worked for Accenture as a management consultant for 10 years. And I covered technology, media, telecom, and internet sectors for 10 years. So almost all of my career covered by internet, innovation, technology, and startup. And I'm so excited because I believe I can leverage my experience in MPower. And again, collaborating with the super prominent, 3GPs and the other women members. And as Kashi-san, Yumiko-san, and Miwa-san said, I feel, in Japan, still the startup or internet sector, basically male-dominated, a bit, old-style kind of, community. But I believe MPower can unlock that to diversifying the ecosystem and building more sustainable and, contributing to the social issues. So I think this, opportunity is huge. And I also think MPower just started. So I'm so excited to the potential and, what can we do in the future and, in the mid to a long term. So thank you so much.
So we are so lucky to have Masa joining our team. We did not, deliberately look for a male, but we want to hire and recruit the very best talent we can find. And we got very lucky finding Masa, and we're thrilled that he's a colleague. And besides the four of us, you see there are four other people on the slide. Erika Suzuki, Yuna Sakuma, Sha Ye-san, an operating partner, our former colleague of Yumiko and mine at Goldman Sachs, Lisa Shallett, who's based in New York. And we also have probably the hardest working member of our team is not on this list, is Shizuka Schweiger, who is our office manager as well. And we have a couple more people as well on the team. So we've really grown the team in a short space of time. But we're really excited to have these members. Just a couple more slides, if we will. The target size of our fund is $150 million US. Despite trying to launch a first-time fund under a global pandemic, that challenge enough was very, very daunting. I think we got the timing quite right, and we are very blessed to have the support and votes of confidence from some very well-known, established, some would say blue chip, limited partner investors in our fund. Those that are publicly already released include Sompo, Daiichi Life, and Sumitomo Mitsui Trust Holdings. So we are very pleased that all of our investors are truly aligned with our mission to integrate ESG into the startup ecosystem here in Japan. And by the way, we are not just investing in Japan. We're investing in Japan, startups, mainly middle to later stage, or middle to growth stage, but we're also investing in overseas startups as well, which is why we're Japan's first ESG-focused global VC fund, so not just domestic. We have 3 companies already in our portfolio. You can see on our website, childcare tech company called Unifa, a multilingualization platform, a SaaS company called Woven Technologies, and then the US company we just invested in a couple months ago. It's called Jupiter Intelligence. We think it's a global leader in climate risk analytics. You can see more info on our site. And then lastly, kind of why on earth are we focused on this ESG angle when we invest in Japanese startups? I already alluded to it a little bit earlier, but just personally from my own experience working in sell-side research for a long time and delving deep into issues related to particularly corporate governance matters, and many of you are probably familiar with some of those challenges in Japan over the past few decades. It's very hard, put it simply, very hard to teach old dogs new tricks. Trying to be, for example, I had a lot of activist funds as clients. You know all the famous ones. They were all our clients. And trying to help them change the ways or influence behavior of large Japanese companies was very challenging. And so part of our thesis is, why don't we try to instill these ESG values, not when they're adults, but when these companies are still in their teenage years, i.e. more nimble, more malleable. Not every startup will want to do this, no doubt. But those that believe, as we do, that this can truly create value for their companies, those are the companies we want to partner with. And because the duration of a VC fund, like all VC funds in the world, is 10 years, not that we will, stay with it for 10 years, but the duration of our fund is a long time. This is a long-term partnership we are forming with each of our portfolio companies. So we believe it helps those companies in terms of, what Masa mentioned earlier about diversity, helping companies, for example, add value through creation of new products, new markets, to recruitment. I don't know, we're dealing with young people, young entrepreneurs every single day. They talk so much about purpose, right? The purpose of their organization. Why are the employees there? That's very important. So helping them articulate that purpose is part of our ESG support. And also risk mitigation. Do they have enough people in the decision-making groups of their organizations to look out for maybe new competitors that are coming right behind them, or regulatory risks that might be on the horizon that they're not mindful of, these sorts of things. So to us, ESG it sounds like a kind of a compliance exercise, but we don't view that as such. We view this as core to what a company needs if they're truly going to go scale and ideally go global. So that's all we have for the preamble, and I think Isabel's going to lead some Q&A.
Okay. Thank you very much indeed, Kathy. I think I'll jump right in there since I'm in this position to be able to ask the first question. You mentioned in your presentation that the target size of the fund was $150 million. I think I've seen reports about you saying since then that you got a lot more than that, or you got more than that and you were surprised about the amount. And I was wondering if you can say how much that was, or give some idea of how much more than you expected and what that says about the appetite for this kind of investment in Japan.
We are not disclosing the amount of capital we have raised so far, but I think I can say that we have been very positively surprised. We are honestly extremely pleased with the way the fundraising has been progressing. So that's all I can say, because I cannot give you the number, but it's basically there. In terms of the response we have received, like I said, it's been extremely positive, but I think it goes to show you how that the awareness among large institutional investors in terms of what they need to do, which is basically to introduce ESG-driven approach to every asset class that they have. And that's what they want to do. And I think that's why I think there has been such a strong response from very large institutional investors. But quite frankly, in our universe, which is private investment, PE, VC, there are really no realistic options for them to implement their all asset class ESG integration. So I think that's part of the reason why we have been very, fortunate to be able to raise the type of capital money. And someone was actually mentioning to us that even in the U.S., the largest amount of capital that a first-time fund led by women was something like $47 or $48 million. Don't quote me, but somebody said that. So the fact that we've been able to raise much more as a first-time fund, no track record, female-led, it goes to show you how seriously people are thinking about what they can do to really promote ESG-driven investments, and people meaning very large institutional investors. So that's a good start.
Okay, thank you very much. Actually, I do want to ask one more question, which came in my reading about ESG before I came to this session. I came across an essay about how Japanese capitalism has always had this kind of ethos of not only just purely trying to make money, but trying to do some good for their employees or for society at large. I wonder if you had any thoughts about, despite having that ethos in Japanese business, how has that gone wrong? How has that not translated into being able to do the things that are obviously needed in terms of ESG? I don't know who to address that to. Kathy, you perhaps?
I can start, because I do have a little bit of history with that question. I think that you're referring to this concept called sampoyoshi in Japanese, which is kind of more stakeholder capitalism, I guess, than shareholder capitalism, which is, I think, in this day and age, very becoming very popular, meaning people kind of understand, okay, it's not only about shareholder interests, but it's about other stakeholders. However, I think what may have been missing, from my vantage point, again, I'm biased because I've been looking at publicly traded companies, is this element of not honoring or not paying attention to minority shareholder rights has been a huge problem in this country. So when you have share ownership dominated by cross-holdings, let's say, big financial institutions, big corporates, who frankly don't care about things like ROE or profitability metrics. They own each other's shares for a business strategic purpose. But what that does is it distorts, right, that company's ability to really become profitable or really pay heed to the interests of the minority shareholders. And that, I could go on and on, I'm going to leave it at that, but I think that's been the biggest problem with Japanese governance. Now with the corporate governance code, the stewardship code, you have a lot, and then, before, when I started my job as a strategist 20, 30 years ago, nobody voted in shareholders meetings, right? Now you can't get away with not voting, right? And people have voting guidelines. There never was voting guidelines for Japanese institutional investors, but now that they're all signatories to the stewardship code here, you actually have to have guidelines. And within some of those guidelines today, interestingly, like Goldman Sachs Asset Management, where my colleagues, we work together, they have a guideline for voting for companies in Japan that if there's not at least one female director on a Japanese company board, that triggers an automatic no vote against that company's management. State Street Global does the same, and we know that's quite well known overseas, but in Japan, that was kind of a first. So that's the kind of development that I think this is triggering. So we're not saying sampoyoshi is bad, but if you really want to do sampoyoshi, you do have to take into consideration minority shareholders.
Okay. I actually, here I am, my third question, but just to follow up on that quickly. So what we've seen in with major Japanese corporations is that their governance is not working perhaps as it should. But in ESG, obviously, you have 3 different arms. You have the environment and the social and the governance. So would you say that with Japanese corporations, the issue has been that third one more than the other 2? Is that the...
Yeah, it's a bit relative, but I think that globally, if you, again, just publicly traded companies, if you did across-the-board ranking by industry, the Japanese companies historically have tended to fall short on the G of the E and S. Probably stronger on the S, relatively speaking. Stronger than the E than the S and the G. The S, though, they fall short, as you know, on diversity-related matters. So,
Can I
Yep.
talk a little? Yeah, I'd like to follow up a little about the startup, situation, because I have, been in more than 5 years in a startup, investment. I think the ESG-wise, the S factor looks like a bit, working in startup because the entrepreneurs basically want to solve some issue, and based on their experience, and entrepreneurs really have a very strong passion to solve some social issue or some problem, and the product itself should solve something. And then if the product have a product market fit, the company will grow. So basically, I think many of the entrepreneurs in Japan have some mindset to solve something and scale the product. So I think S looks like a bit working, but E, the environment, I don't think many of the, how should I say, startup can visualize the like carbon emission or that kind of initiatives. Compared with large corporation, I think startup have a bit lag behind, visualize the carbon emission or impact to the environment. And the governance-wise, I think the entrepreneurs seeing in the future they will do IPO. So to achieve the IPO, they have to comply with the rule, right? So basically, the startups' mindset is they need to adjust something to fit into the regulation or rule or achieve the IPO. But I think we need to change the mind to not just applying to the IPO or something, more like leveraging how to diversify the company, and then the performance should be more better. Or if the company try to treat employee as more better work environment, then the motivation and the performance of the employee will improve. And I think some of the entrepreneur, especially the successful entrepreneur, understand that. So they will try to improve the environment better than large corporation. And then the startup can hire the talented people from the large corporation because our company is much, much better than the large corporation. So I think which is happening in 5 or 10 years. And day by day, I think the super talented people are coming into the startup, which is good for Japanese startup ecosystem. But we really want to combine all of the E and S and G, and such a experienced GPs can support enhancing that ESG working in startups. So this is, I think, the startup situation in Japan.
Thanks very much. Yes, Ilgen.
Hello, Ilgin Yorulmaz for BBC World Turkish. I also co-chair the Diversity Committee at FCCJ, so I am more than happy today to have you and Isabel moderating. This is a very standard question, so please allow me to ask it, but in your experience, combined experience perhaps, what are the structural barriers for Japanese women to actively join economic life, either as entrepreneurs, because we know in this country almost 95% of the companies are small and medium, yet so few are run by women, either as entrepreneurs or even as employees who are equally treated and equally paid. And maybe also a second question to Fukasawa-san's comment, we see something called great resignation in the US. Do you observe the same thing here in Japan, and is it a risk or an opportunity for Japan and for your own business? Thank you.
barriers to women.
Okay. Yeah, barriers to women. The biggest. This is my vantage point, but my view, and probably Yumiko and Kathy can add to it. But the biggest problem is Japanese men not participating in household chores or child raising or other things. And you talk a lot about women participating in labor force, which will improve the productivity. But statistically speaking, Japanese female labor participation is quite high right now. Yet Japanese male participation in domestic workforce is quite low. They spend the least amount of time at home, and but there's a hope that male 産休ってなんて言うんだっけ parental leave ratio has increased from 6% to 12% this year, so which is probably equivalent of 20 years ago in Sweden or something. So I'm hoping that will go up to 80-90%, so that Japanese women can have the equitable footage in the workforce as well.
Just a caveat that Masa is an exception to what she just said.
Thank you.
And to the question about the Great Resignation, do you have any?
Do you want to?
Any thoughts?
Yes, sorry, a question about the
Great Resignation. アメリカのこの COVID で人が辞めてる。
in Japan. Okay.
In Japan.
Yeah. I think the COVID impact in startup, I think there are two factors. The one is obviously from the COVID, it's globally happening, like a restaurant or travel industry are damaging a lot. So some startups purely focus on travel industry or the food industry are damaged a lot. And actually I experienced in April some of the portfolio company have damaged a lot. But I think there are two patterns. The one is damaged and purely revenue and everything are shut down, kind of very damaged situation. But some entrepreneur really have a creative mindset to change to the pivoting to the other sectors and then scale besides the food or travel industry. But generally speaking, I think that the startups are leveraging digital technology, and COVID somehow impacted enhancing the digital technology. For example, the Zoom have such a growth by the COVID. So many of the digital software as a service type of startups have some how should I say, it's a tailwind. I mean the positive impact of the COVID. So I think there are a lot of plus positive impact from COVID, but again, some industry have damaged a lot. So I think the startup's mission is how startup can quickly adjust to the tailwind of the COVID or some social demand from the COVID, and they want to solve the problem by the digital technology. So I think that compared with the old industry, the startup have a very, very speedy and quickly decision making and changing the product, adjust to the situation. So this is the kind of situation in Japan.
Maybe I'll just add one more thing. I think, as Masa mentioned earlier, we are noticing that a lot of the startups we speak with here in Japan have been hiring people who don't come from a startup background, right? There are people coming from investment banks or consulting firms. And I noticed in my final years at Goldman, it used to be the case that young people that Goldman would recruit right out of university would stay at the firm at least, 4, 5, 6 years. But I think with I don't know if you call it the Great Resignation or COVID, right, this sort of reset, what do I really want to do with my life kind of question, that's causing them to rethink. And even if it means a big, cut in compensation and all of that, it's just life is short. Let me try something that's maybe a little bit risky, but if it doesn't work out, I can always go back to what I used to be doing. So we're very excited about seeing that flow of talent, quality talent, not like everybody's quality, but really quality talent flowing into startups, which is quite necessary and very exciting.
Okay, thank you. Peter.
Hi, Peter Elstrom with Bloomberg News. First of all, thank you very much for coming and for spending this time with us. It's really a pleasure to hear your points of view. Kathy, you alluded to the fact that Japan has historically been quite a bit behind in terms of startups, the US for one, and also China. If I remember the numbers right, the US is going to have about $120 billion to $140 billion in venture capital invested this year. China should have 80 or 90 billion, and Japan will have roughly 3 billion, something like that. So proportionally, I think it's sort of what you talked about. What do you see as the challenges that have held the entrepreneurs and the startup community back in Japan? And what do you see as the signs for optimism that led to the founding of your firm?
Well, again, I'll give my 2 cents, and the team can add to that list. You know, I think one of the obvious obstacles has been maybe societal mindset. You know, imagine a scene at a cocktail party and you're updating your friends, or your friend comes up to you and says, "Oh, I heard your son graduated from university. What's he up to?" And if it's working for a large blue chip company, you feel as a parent quite proud because they recognize it right away. So, wow, that's really amazing, right? Or if it's kind of an unknown startup, never heard of it before, they just politely nod their head and then go to the next person in the room. But I think that we're seeing now what Japan has been lacking perhaps is these successful examples of startups that have really grown to become very big players, even abroad, right? And I think those successful case studies are giving younger people especially a reason to say, hey, yeah, I got these offers from these blue chip companies, but maybe I want to do something different. So I think the societal shift is beginning to take place. So this willingness to take risk, which we know there's a lot of risk aversion in Japan, but we sense there's a little bit of hint of change. And I think a lot of people have said to us, but Japanese just, their DNA is just not entrepreneurial enough. And I, for one, totally disagree with that statement. Because if you look at continental Europe today, I don't know if any of you looked at the startup scene in France or Germany or the Scandinavian region, it's hopping, it's vibrant, it's on fire, right? And these are not countries that are like America, right? They have this very elitist educational system. They all want to work for the Ministry of Finance when they graduate from whatever prestigious college. Yet they've managed through a whole variety of policies, tax incentives, whatever, to really boost their ecosystems in the startup space. So I think it's hard to compare always Japan to America because it's so different, but I think Japan to perhaps parts of continental Europe are easier, and I think totally doable. And like I said earlier, we have the ingredients. The ingredients are in the kitchen here. We just need to figure out a way to make, put two together. One other comment I'll make is, one of the reasons we're targeting middle to late stage in Japan is the fact that if you look at Japan and the startup evolution, you see a lot of companies at that growth stage, right, later stage, need capital, but because there's actually not that many VC or investors willing to provide capital at that later stage, they get very tempted to go public. And oftentimes they go public prematurely, usually public on mothers. So kotsubu de jojo shou, they list when they're actually too small, they should be waiting, right? And we want to be one of the providers of capital to help them grow to scale so that they are IPO ready or M&A ready. And by the way, I think it's a statistic like 90% of exits here for startups is IPO, whereas, for example, in other countries, the majority is acquisition. Like IPO becomes the goal, and it should be a means to an end, not the end. So that's another thing structurally that I think there might be some scope to change. You guys want to add anything else?
Can I talk a
Yeah.
little? Yeah. So yeah, as Kashi-san said, like kotsubu jojo, the small IPO in Japan, it's totally different from U.S. market. In case of U.S. market, maybe billions or 10 billion or more than that dollars of the value is needed to do the IPO. But in Japan, maybe around like $100 million or less than $100 million, maybe $50 million IPO is possible. So totally the size of the IPO is different. Therefore, the entrepreneur's mind is they can do IPO very quickly, right? So that's the one maybe issue for the kotsubu. Kind of a small or medium-sized startup tend to do a small IPO. But I think the situation has changed in these like 5 to 10 years because the entrepreneur have an opportunity to raise money even without IPO. Because there are a lot of investors like MPower or many venture capitals or global institutional investors are coming in Japan market in these 5 to 10 years. So I think 10 years ago, it's very difficult for startups to raise around 10 million US dollar. But now, I think it's possible to raise 100 million or more by venture capital or institutional investor without doing IPO. So they can postpone the timing of the IPO until they build the huge, valuation. So I think the situation changed a little by little. And again, the talent, the human capital, as I explained a little, the talented, high quality people, the human capitals are coming into the startup ecosystem. So combining the human capital and, the capital raising money, I think the more large value creation is possible in Japanese startup ecosystem. And one more thing is I think that Japan have a lot of issues like, declining population or aging population. These issues are, I think, that one of the most developed, situation in the globally. So if Japanese startup can solve the issue and if the product can be available in the global market, I think the valuation should be 10x or 100x compared with the existing situation. So we believe that hypothesis and want to prove that by utilizing the ESG, support. Hi.
Thank you. Yes, gentleman in the front here.
Hello, I'm Etienne Balmer from the French press agency in Tokyo. And talking about MPower, just to add some more color, I just want to know how concretely do you ensure that ESG is really at the core of the company that you are helping and sustaining? Do you really focus on the 3 letters of ESG equally, or do you sometimes accept that one company, for example, is more stressing on one letter than the other ones? So yeah, I'm taker of any concrete example of how a company could pass the bar or not according to your criteria. Thanks.
Thank you for the question. In terms of the ESG integration part of our investment process, we take the approach that, first of all, when we look at investment opportunities, when we look at startup companies, our assumption is that these companies are not ESG ready. They're not completely ESG integrated as yet. And that's totally natural. That's totally expected for companies, especially at early stages. Even for large companies, even for listed companies, ESG integration is still a very big challenge. So our approach is to say, does the founder or leadership have strong ESG mind? Is this company embracing the ESG approach? That's the question we ask. Quite frankly, it's impossible to know with 100% certainty whether that's the case or not. We do our best to feel comfortable that there is a very high level of commitment that is coming from the very top of the company. The commitment in terms of integrating ESG into their business development. So that's the approach we take. So what that means is that when we look at companies, when we go through the whole process of choosing companies, selecting companies for a portfolio, we always keep in mind, does this company have ESG mind? Is this company paying attention to ESG related issues? But we do not believe this is something we should expect to be 100% ready. So when we make the decision to invest in a company, startup company, what we do, this is after a number of discussions and dialogue with the founders and leadership team, we ask them to sign MOU, Memorandum of Understanding, in which they make their pledge to work with us to implement ESG. So it's not legally binding document, quite frankly, but at least it's something that we can rely on in terms of the commitment that the company is making. So that's basically the beginning. So once we decided to invest in a company, we ask them to sign this document. And by the way, by then, we should have a pretty high level of conviction that the company is ESG minded. So we do a lot of interviews, we look at a bunch of different things, but at the end of the day, it is our trust. Do we have a trust in this person? And then once we have done that and signed, the MOU has been signed, basically what we do is to work with a company in terms of identifying, first of all, identifying materiality areas. As you said, 3 ESG buckets, and there are a bunch of different things within each of the ESG, right? And quite frankly, in terms of the materiality areas that can be relevant or important for startups, it all depends on the company. What sort of sector is the company in? What kind of stage the company is at? So there is no sort of standard framework that we can use for every single company. So we work with a company, try to understand what ESG elements are relevant for the company. So that's the first step. We work with them and we let them decide. We give them a lot of suggestions. We say, given your sector, given your business model, we believe these are the ESG areas that we think are relevant for you. We give that suggestion and we let them decide. So when they decide, when they identified ESG materiality areas, we actually go back to them and say, okay, given your areas of focus, we think these are the actions that you should be taking, and these are the tools you can use to achieve your goals, and this is a timeline we think would make sense for you. And we are happy to help. We are happy to work with you to implement these actions. So that's the plan. I mean, that's the plan. So you should have another meeting like this in about a year and ask me the same question, because it's the beginning of a fund. So the idea is for, as Kathy said, we invest in a company that is sort of teenagers kind of state, right? So maybe the company is 15 years old and she or he is going to go to college. And at that point, when he or she turns 18, we hope that he or she would be mature enough to be standing on their feet and truly, continue to grow as a ESG-minded company. So during the 3 years from 15 to 18, we work with them, and that's the idea. So we think we can do it more effectively working with 15-year-old startups versus 55 years old established companies when it comes to integration or instilling the notion of ESG. So again, this is the plan. We are just starting. We just launched the fund. We have made 3 investments, and that's exactly what we're doing right now. We're having regular discussions with the 3 companies we have invested in, 3 companies in different sectors, and therefore their focus areas are different. Some of them are similar or overlap, but it's not going to be exactly the same in terms of the materiality areas that these companies are going to identify, which is fine. And we give them a lot of advice or help. The common help that, the common sort of area where there is a lot of need for help is diversity. So many of them, not only the companies invest in, but many startups will come to us or come to Kathy. Can you join our board? Because we need to diversify our board members. That's a very typical request that we receive. So not only at the top level, but also in general, they are trying to diversify their leadership positions in general, overall employee profile. And I think we can do a better job helping those companies than many other funds, just because we have networks that are very unique. We know diverse backgrounds, and we feel that this is actually a very strong competitive advantage that we have as a fund in terms of providing very hands-on help or assistance when these companies are trying to put these ESG things in action, including diversity or governance structure. So hopefully, in a year, if we have another meeting, I can say, yes, this plan is working or has been working.
Thank you very much. Yes, gentleman there.
My name is Kurt Sieber. I'm an associate member here, but originally I'm retired. But since I'm retired, I'm very active, and my interest is for we have different investment companies in our group or in our family. My family, 3 daughters of my family, unfortunately, they all went to the United States. They were not happy in Japan, and they never came back. One of them actually is a very successful Wall Streeter. So, but I still believe people to people rather than just country to country. But still, you have to take the location. I mean, we are talking about Japan, we are talking about the United States, and as you mentioned, we are talking very strongly about Europe. We are just setting up a new investment company for for long-term.
I'm sorry, could you get to your question?
5 to 7 years. So my question is, how are you handling the different monies which you have to worry about, particularly in today's world? How do you think about the future of the Japanese yen as an investment, and so on? And also, I'm greatly interested to hear, and I would like to come to your office once to discuss it in detail. What kind of area, industrial area, are you seeing is particularly interesting for your projects? Thank you.
Sure. Thank you. On your first question, so if you had asked me before the end of last year, I might have had an answer for you, but that's not my job anymore. So we're going to refrain from giving any foreign exchange predictions here. Our fund is dollar-based, as you saw on the screen, so it's a U.S. dollar-based. In terms of your second question, our areas of focus are pretty broad. They range from environment sustainability to healthcare, to the future of work, future of education. It could be e-commerce. Again, the overarching theme is technology-enabled solutions to societal challenges. So, yeah, we're not super narrowly focused for a reason, because we want to keep the funnel, as wide open as possible. And I think I can speak for our team. It's so fun because we're meeting these, as Mas said, very passionate entrepreneurs. They're obviously very young. Some have really crazy ideas that seem very niche, but they want to change the world. And we're not a social impact fund, right? We're not investing in things that just create social impact. We're a VC fund, so we're aiming for competitive financial returns. But again, we think we can do that by integration of ESG. So.
Okay, we've got just a few minutes left. If anyone has a very brief question. Peter, you have another one?
You want to ask the last one?
Well, I have one if you don't. But
Please go ahead.
Okay, I actually have one that came in from my colleague at Bloomberg. He's asking about Prime Minister Kishida's efforts to support startups in Japan if you have any suggestions as to what should be the priorities in changing the environment so that startups do become more dynamic in Japan.
So, as I said earlier, I sit on this panel for Prime Minister Kishida, and startup as a word comes up very, very often. So clearly, it is one of the focus areas for the new administration. In terms of the actual concrete policies to support startup or startup ecosystem, I cannot say what will come out of this discussion. The plan is for them to publish a paper from this panel, I believe next spring. One discussion that's taking place and that's related to startups is to really provide social safety that can potentially promote or assist labor market mobility. So that's been discussed in terms of how that can be done from a policy-making perspective. Another area is to really promote digitalization, digital technology. And as you probably know, the government has already announced to launch a very sizable fund to invest in universities supported R&D, especially in the technology areas. So they are trying to see if there are opportunities for the government to implement policies to promote startups, and also really in the area of digital technologies. And somehow, if that can be supported by the regulatory changes that could promote labor market mobility, that's a very big piece. Quite frankly, that's not going to be very easy to implement, to be honest, but that's certainly being discussed.
Okay, thank you very much. All right, well, I know that Kathy Matsui has to get away quickly, so I don't want to keep her longer than necessary. Thank you very much for your very interesting explanation of what's going on in this sector at the moment. We do have an honorary membership for each of you, so I very much hope that you will come back and join us perhaps in the bar and explain further about how things are going later on.
Thank you.
Okay, so should I just...
Thank you. Thank you.
So thank you. So we're members.
Thank you.
So we can have drinks at the bar. That's nice.
Okay, well, thank you very much, Joe, again.
Thank you very much.
Thank you. Thank you.